Hello, this is Coach Mike with WinningStockCoach.com. Gonna start out with the upcoming week's market overview video. For the past few weeks, been talking about that 1908.47 target. The week before last, we talked about if 1963.40 failed, we'd probably head down to that 1908.47 fairly quickly. Thursday, we had that little dump as the markets looked to have actually bounced on Wednesday. Started out on Thursday with a little bit of a jump, and then we got the news about the airstrikes and whatnot, and it did kind of pull us down pretty hard. And then Friday we had a nice solid day. Now, typically with these videos we talk about potential downside targets and potential upside targets. Again, the green trend line that you can see on my chart, that trend line is a longer term trend line. We've had bounces off of it before. That would be where I'd look if we were to continue downwards. As strong as the day was though Friday, we might see some continuation with that, so I wouldn't be too scared. I still think that 1908.47 area was a pretty good support level. We got below it on Thursday, but we didn't close below it, which really makes me happy overall of these target points. And for just a week over 7 months now, these videos have been accurate within 0.5% on the S&P 500 for the target areas that I've given. So, downside area, we'll look for that green trend line. Now, that green trend line too, I want to explain, would be really important. In the past few weeks, I've said, even though the market's set to pull back, long-term positions aren't really you don't need to be scared out of those. Well, now that we're looking at where, if it pulled back further, we'd be at that green line. That green line is where you might want to be worried about long-term positions should it fail. So, it's not necessarily that you need to sell. You could take in-the-money puts to give you the right to sell at a strike price. That would be an option you can have. That would be only if we failed this green trend line here on my chart. Now, the other thing I want to look for the high side is, might sound like a little bit generic, but I want to make sure we can break over this 1940.58. I told members of the coaches roster we kind of started with just a couple entries the other day off these bottoms. And as we get further confirmation of more topside to come, we'll start looking for more positions to be adding to. But for right now, we want to get over this 1940.58, the same type of targeting system. I just used the last low, the last high, and then this low. Well, we had the lower high, and the mathematical equivalent of a replication and move that was seen before could have us only come into this 1940.58. So I want to make sure we're not going to consolidate down here. That's my biggest concern. I don't just want to ping pong between the high and low points right here and be kind of stuck in a sideways motion. And at that point, a break above that, we did have that longer term target, 2027.03. Not necessarily going to say it would hit it on the first spike up if it should break over this area, but I would look for more of a replication like we saw April, May. A decent spike, consolidation that still kept you safe for longer term positions. Another break, more of slightly up but more sideways than up type of move that eases you into that target area, and that's what I would be looking for more than likely should we continue upwards from here. Now over to the Dow Jones Industrial Average, the DJI chart. Couple trend lines that I'd had, we smacked right off of one on Thursday, and good positive strong move up on Friday. I would really at this point in time look for this trend line to hold. That would be my support. If this trend line fails, well, support fails, and then I'd be looking at this 15,904 target area for the Dow Jones Industrial Average. But I do have reason to believe that it could hold off of this area. Let me show you my reason to believe that. January's lows into February's bounce, and back there during the government shutdown, the October bounce that we saw in the markets, both of which were the formation of this trend line, which was held in our recent pullback. So, it's bounced off of that trending area before. You got to assume it could do it again unless it fails. The good thing about an uptrend line is every day that goes by, the value of that support gets higher. So the more days we get through without it failing, the better prices on your stops and the less worry you need to have. As far as the DJI to the high side goes, I'm really looking first around 16,720 is an area that I'm watching for. That area would be what's called the dead cat bounce, a 50% retracement of the down move. And if it were to break above that area, then we would have some more reason to think that it had a higher probability to continue upwards. Even though I think there's a higher probability now with this pullback for the upwards movement, I still got to recognize charting patterns that do exist, and it's got to break above what is commonly called that dead cat bounce. You can mark that really easy with your Fibonacci retracement tool, just going from your high to your low. When I do it, I go from like the highest open to the lowest close, or if I go from the bottom to the top, it's the lowest open to the highest close. And actually it's 1744, 1745 that I'd be looking for what could literally just be what's called a dead cat bounce. We'll take a look now at our small cap index, the Russell 2000. We did actually come down and bounce really close in proximity to this trend line that I had, this darker blue one. Because I'm a firm believer in, if you're not going to buy on a positive move from support, you're probably just never going to buy. You shouldn't be trading. I've got to say, it's made that positive move from support, much like the values and the discussion I had with the S&P 500 and the Dow Jones Industrial. I want to see the Russell show me it can break this 1139.55. A break above that, even if it were to pull back from then, I would look for some small cap entries on a higher low. So I would actually at this point in time kind of let it make that move, and on any retracement from it, buy on the higher low for some small caps. I think it's got good potential. I mean, it's fallen the hardest, and we saw before when we discussed it back in April and May that big falling pattern led to more the biggest high side potential. And during that time, members of the coaches roster, we took in May and June several small cap stocks for some really nice gains. And now finally I want to get over to the COMP chart. This is our Nasdaq Composite chart. This line right here, this horizontal, I know it doesn't match up here on the daily. It's actually the weekly swing high point. And as you see, we're able to come down and hold that fairly well. About a month ago, actually about a month and a half ago, we talked about the breakout pattern from that swing high, and how at that time Nasdaq stocks, the big name technology stocks, Facebook, Apple, all that, we were being shown that they may have the better momentum trades at the time. And once again, our indice charts didn't lie to us. During that time, we saw big name tech stocks on the Nasdaq with momentum breakouts that have since not really had the same momentum, which is carried over to the indice chart. But we have pulled back and are resting right there above that swing high point. So should that value hold, and that value is about 43.37 or so, give or take a couple pennies, and should that value hold, we should have a pretty firm support level on the Nasdaq to help us plan trades with what could give us momentum and what could cause some failures. Now, if it does fail that, the Nasdaq has had a pretty consistent trend line for a while. I would believe that it could come down to around 4,200, and that's where I'd be looking should that swing high point fail. Otherwise, again, you're holding just above support. The risk is minimal when you're on a support level, and quite simple, why I say the risk is minimum is if it fails the support, you sell. Overall, for the week ahead, what I want to look for is that we get some continuation. I wouldn't be surprised if the markets opened up a little bit down tomorrow, just because of how big of a day Friday had, with a lot of things not pulling back at all during the day. I mean, I had members of the coaches roster in some options for Lockheed Martin and Honeywell and Goldman Sachs and UTX, and they just charged all day long on Friday without any glimmer of a pullback whatsoever. So what we'd have to understand is with that big of a move, obviously a pullback could happen. So if the markets open down, I would actually encourage that. That means we don't have to watch the pullback. we could simply prepare for should we move upwards from the open. Otherwise, we'd have to watch for how much further some things could run intraday before we get a little bit of a pullback. And it'd be on that pullback where you'd be able to establish some higher lows and even a trend line across some bottom points. Right now, since the bottom was made, or assuming the bottom had been made, you haven't really got the chance to establish a trend line because things didn't come back. They just kept going up and up and up and up and up on Friday. And because of that, you need a little bit of a healthy pullback to let you get some better entries and to establish the next trend sequence for the up move. This is Coach Mike from WinningStockCoach.com, wishing you the best of luck in the upcoming trading week and encouraging you to make sure you have a understanding of basic support, resistance areas, price points on your indices, and have a plan for every trade that you make. God bless.